Good morning, everyone. Great to see you all today. Welcome to the room. Today is Monday, July 24th, 2023. The morning session, we have early movement here at the RTH Open. An initial overnight narrow range for the most part. A little bit of strength right at the RTH Open, similar to last week, but right away that strength smacked back down. We've seen this thing rotate back down a bit here. And impulse moves have now developed. Those impulse moves, very, very important right now. If you take a look here, the NQ, strong high, sell-off, impulse low, bounce back, and now has the midpoint. That right there is a great intraday key range to continue to watch here heading into the rest of the session. It could keep prices mostly in check for the rest of the day, which means if price comes up here and you see a little bit of reaction here, you could be looking at a rotation back down to the midpoint and maybe across the range. If you see a push down below this low here, that could provide an opportunity to react back toward the midpoint and maybe across the range. So right now, those are your edges. Strong high, strong low. That gives you your areas right there to defend early this week. There is a modestly downward bias, downward trending bias here to the NQ. The NQ is the most bearish, whereas the YM right now is testing the previous week's high. The YM testing the previous week's high, and the NQ is currently below the previous week's low. So, or was below the previous week's low, rather. So a big difference there in where they are on the chart. If you take a look over here, you'll notice this is the key range right there for the intraday purposes. So it's basically that 1 hour range. It encompasses the overnight price action, and that overnight range, or that key range rather, has developed right around the previous close. So that's kind of like the midpoint of the range almost is the previous close, and you have a little extreme on both sides. So again, good area right here for movement up ahead. Whether it's a failure here at the low and you drop more, or whether you reject at the low and snap back to the mid, you know, there's a little bit of movement that could be here ahead. Now keep in mind Wednesday we do have the Fed statement and the FOMC interest rate decision. So it is Fed week. Roughly every 6 weeks we get Fed week, about 8 times a year. This is one that comes in at a time where the market has rallied tremendously, and we've seen quite a bit of strength over the last 6 weeks and even a bit beyond that. So this is a very bullish period of time right here to get an FOMC. We'll see how the market responds to it. But early this week, it could be mostly range bound, back and forth and range bound, and then come Wednesday afternoon we could get quite the dose of volatility into Thursday. Thursday could be a super high range day because it's going to follow Wednesday's Fed and interest rate decision with the press conference, but it's also going to have GDP an hour prior to the RTH Open. So Thursday could be a huge day in the market. Wednesday could finish a huge day, and then Friday could be a continuation of that move. So we could be looking at quite the action here later on this week. And then thank you to Michael there for posting the earnings releases for this week. This gives us a great list because that's another facet here that could lead to volatility, not only in the names in general, but in some of these markets. So you'll see some of these names here are some big names to look out for later in the week. For example, Wednesday has Meta, right? That's been one that's been hot and on the move. You also have things that we've been talking about, like a Roku, for example, which has had big time movement. So a bit of a smaller company there. You have Google and Microsoft on Tuesday. That's going to be a big time watch right there for those. And then one thing to keep in mind again is that these could lead to some big gaps in some of these names. We've seen tremendous size moves, so just keep that in mind. I mean, some of these markets have literally gapped up 20, 30, and even 40% on some of these reports here sometimes lately. So it's been quite a bit of volatility. So some of these names are before the market opens, some are after. One of the ones that's going to be interesting here will be Verizon. So Verizon comes out prior to the RTH open on Tuesday. And Verizon is our buy candidate in addition to AT&T here on these lows. So last week, it might have been on a Wednesday and into Thursday, Friday, we were talking about this name because it started the week with heavy selling. And then by a Wednesday, this thing was turning around and throwing off a pretty significant rejection tail. I mentioned, you want to see that week finish strong and finish the rejection off. And if it does, it could be a tremendous near-term bounce candidate, say 1 to 5 weeks. But it could also turn into a long-term bounce candidate, as these are 10-year lows right here in Verizon. 5-year lows, 10-year lows. So if you look back here, we haven't been down here in over 10 years. That's no guarantee we go higher, but, again, price auctions lower to entice buyers to come off the sidelines, defend, and return price back up. So this is going to be an important zone right here, the previous year's low. Rejection here, prices below it. If you can get above that previous year's low, you snap back. And the next key level above would be the previous year's close. Can it get that high? That'd be going back to break even on the year by the end of the year. But if you're going to reject this low and recover, then you have a shot to go all the way back to the recent pivot high as well. And that's right here, right? That high. Top of the range would be this level right there, 42.50. So from these lows, 34, 42.50 could ultimately be up ahead. I know that's not very sexy in terms of the amount of points and distance there compared to some of these other stocks. Some of these other stocks are going to gap this easily in one day. You know what I mean? Whereas this one's a little bit longer. But if you like something here that has the potential to move higher, and you can get in at a relatively low cost for a long-term idea, this is one of those ideas. What I mean by that is the 35 strike could be used in this case, and it could be used in multiple time frames. For example, the 35 strike is out of the money right now, but by the end of the year, where is it? If we get the bounce that we're looking for by the end of the year, we could be using January expiration there, which is 179 days to expiration now. And the 35 call right now is $1.72 at the mark. $1.72 half. So, there's that idea. There's also every strike at the $1 increment. So 34s could be in play and anything up. So anyways, this one could be one that ultimately reverses off of these lows and can get back to here and then work its way to here and higher. And that would be a significant move, but could take a little while to do it. But this is one to keep an eye on. Now, this one has earnings prior to the RTH open tomorrow. So if you want to be in on this one here ahead of earnings, then today's the day to do it. If you want to wait and see what happens tomorrow, then tomorrow at the RTH open could be a way to get in. Or after it, after obviously. But right now, strong rejection on the low at the bottom end of a D-shaped profile, right where you want it. So you're looking for a snapback to the HVN 3750, and then a shot to rotate across the range to these prior targets as high as 4250 up ahead. So some thoughts here on Verizon. That one is on the earnings release list as well. So a lot to look forward to here. Monday could be about back and forth price action mostly. Tuesday, you start seeing some big names come in. Again, like we said, Microsoft, Alphabet will be huge after Tuesday's close. And Wednesday, you have Fed in addition to big names. AT&T, speaking of Verizon, AT&T is prior to the RTH Open on Wednesday. This is what AT&T looks like in the weekly time frame right now, showing some strength. We talked about this one last week as it was showing a rejection here, and price was still below the previous low, and by the end of the week it finished very strong. I mentioned at the time that as a candidate against Verizon, I actually like this one a bit better because of the channeling behavior is much more clean and clear, and you can see the potential here to snap back again toward the previous year's close by the end of the year. And that HVN, you also have an upper channel boundary that could be reached somewhere in this zone. So from where we currently are, 15 to 20 on the high end, maybe we can get all the way back up to the top end of the recent range. That'd be 2150, and that's be about right. If you fade on the lows here, fade on the low, fade on the low, you snap back, and at times you can overshoot and go right back to this previous high. So as high as 2150 on this one from a long-term perspective. Again, that doesn't seem perhaps as sexy there when you're talking about a 6-point move right now by the end of the year, and you have some of these other stocks right now averaging that for a day. So but these are good levels, 10-year lows, like we said, with the potential to, over time, if you have a 5-year outlook, you know what I mean? How far up are we up the range? 26, 32. This is a 10-year low. Where are we down the road? If this is the bottom end of this large D shape, then maybe we can get back to 32, 34, 33. So that would be a double if you can wait it out to 30, which is the top of value here. So depending on your outlook, again, this could be one of those ones that's a sleeper, a cheap one that ultimately can double over time. So some thoughts right there on those couple of candidates. Those have been on our buy list there. At the moment, we're still in the range for the NQ and the ES. You can see right here, impulse high, impulse low. You really want to avoid the chop in the middle of that zone at the moment. We could continue to see chop. Right here, prior to that move, we had 6 hours of sideways, and now we're right back in that range again. At the moment, we have a little higher, a little lower here. That gives us the edges, but that's really where the opportunities are at those extremes. For right now, we're kind of stuck in the middle, and it could continue to chop back and forth in here. But if we make a move to one of these extremes, that could provide the next fade opportunity. Now the ES, we had a key range that developed on Friday. Was it Friday? Yeah, Friday. That key range is still in play. So if you see right here, 45.90 is the key range high there. And over here, 45.64 is the key range low. That's Friday's action there. And then it hit that midpoint here, and you can see the middle chop back and forth. And then here, Sunday night and into Monday, pre-market there, we've seen this thing trap below and squeeze back up, and comes right back to the middle of that key range. That's the middle part right there. And has yet to still hit the high though. 45.90 is the high end of that key range. So while we have an intraday key range that's in play here in the ES today, I'm not marking it right now. We have the one from Friday. That one could be plenty useful here to be patient just for that one. So if price comes up here to 90, 92, that could be a great fade. Right back down to 78, maybe to 64. We'll see how it plays. But Friday's key range is great. Well defined key range that could continue to keep prices in check over the next 1 to 2 days as we head into Wednesday. The NQ also has a similar move from Friday. I don't know if it barely missed that key range, but I like this one for the current session here. This one's a great one. We could mark it up. Let's see. Let's grab that high right there. Let's see. The high is 1875. The low is 83.75. There you go, something like this. So that's your key range. I could work on this a little bit here and say 75, 75, 50. There you go, that cleans it up a bit. Or maybe I have to drop it. There you go. So that's the actual key range there for today's price action. It's not super huge. Today's ADR is just 59% of ADR, but that's not bad for a Monday prior to FOMC Wednesday. And that's not the finishing value either. We could easily still go get these lows and open up the range a little bit and snap back, or likewise up here. So the day's range is not likely in for the day for the NQ, but mostly in. That's what I mentioned earlier, mostly in. So that high, that low sets most of the day's range. There's always the potential that we could fall through this low and really drop or rally. But again, the likelihood of that on a Monday ahead of FOMC Wednesday is low. There can be directional conviction on a Monday, Tuesday prior to Wednesday. It's not always the case. I would say that that's, a low percentage of the time. So some thoughts right there on that key range right there. Oh, sorry, I wasn't caught up on the chat here. Okay, I see a question on ADR by Sachin. I'll answer that one here. And yeah. Hey, 50 push-ups. 50 push-ups every time you get a bit of a mistake in the market, man. You're gonna be pretty buff, perhaps, until you my 50's good. Yeah. Sometimes again, ahead of Fed Day especially, I would normally anticipate range-bound action, but for there to be some sort of impulse move that kind of helps to set the range for the early portion of the week, and I think today's right in line with that. And again, sometimes, when you're looking at the charts here, sometimes you can find a reason to be in one way or another sometimes, which can lead to over trading during times where we should be more holding off, and sometimes like a market like this, I'm more hesitant to be in unless we are at an extreme edge or we get a great reaction of some sort. Other than that, it could be wait and see time, especially with earnings up, because the market's likely going to be waiting on earnings to see what happens out of some of these names, and then wait and see on Fed, wait and see on GDP. So the early portion here is about setting that edge, and then we'll see what happens there. And that's why I really like this initial impulse move here. Indian Q gives a great edge there. And same thing for RTY, impulse move up and back, great key range there. Currently testing the key range low. Strong reaction here at 1990. We'll talk about that one in the higher time frame. So ADR question. Last week we were looking at the Euro USD pair. Great movement there, great reaction down here. Right, this is great bit of movement, great bit of market structure, great change of bias, great continuation. Now we're at a cycle high, so we mentioned, okay, we might pull back a bit, but it could be another opportunity to buy it as this thing tries to go find the previous year's high up ahead. So how much pullback do we get first? So we're talking about that a little bit. Now, the question regarding ADR here by Sachin. On the ADR indicator, this one right here, what are the values on the right-hand side axis? So you're talking about these right here? Or are you talking about these over here? I know that the question was about 20 minutes ago, so we'll see here. Yeah, these ones over here. So good stuff on the side over here. Those are basically the current if it's these right here. This is the 125 and this is the 65% of average range levels. And then these are the raw ADR scale so that these can be plotted, the raw numbers. So on the right side, usually again, this helps me see what the 125 is right there, the 125 here. But then this number, 2038, is also reflected here. And this number is also reflected back here. Now it looks like decimal wise, there's some decimals there. That because this is a Forex chart, maybe the decimals are a little different there. Not sure how that, but it should be. That's what that's looking at. So maybe these over here need to be properly decimalized accordingly on the right. But that's what that's looking at. And then these two levels right there would be right over here. And then this level would be that one right there. And keep in mind when you hover over, those will change as well because you're getting the values for that specific bar. But for the current bar right here, all those levels are right there. So you can see when I hover over these set of levels, you also get the 16.63 yellow. and that's what that is over there as well. So those are what those lines are. It looks like, for again, if you're looking at a currency pair here, this side over here is probably not properly decimalized to reflect this actual, but this is the real number over here. And so when you hover over this right there, it's going to give you the real numbers, which are reflected here. And again, if I go like to something like the ES, which, and that was a weekly chart, right? So if you go to daily or whatever, you know, it's all right there. But if you go, like, for example, here to the ES, this 1 day right there is all that information, and then that right there is there, and then that 46.4 is right here, and that 24.13 is right there. But on that currency pair again, it looks like the far right number didn't. It's just a normal scale instead of going appropriately to that pair. So that's what it looks like right there. YM is demonstrating quite a bit of strength right now. Inside day on Friday, strong break to the upside at the moment, or at least a developing break. It's been trying up here for an hour now. Again, not anticipating this thing breaking out and rallying here ahead of the FOMC this week. So I'd be a little cautious up here still, because as soon as price fails back below 2-day highs, or the previous week's high there, we could be falling right back to the day's midpoint or even lower. So I'd still be cautious of the YM up here. It is the strongest of the bunch. Again, relatively speaking, the NQ is below the previous week's close at the moment. RTY is at the previous week's mid, you know, so big difference there on where we are in the chart. So not anticipating this thing breaking out and rallying just yet. This is interesting right here. This is our FOMC, our most recent FOMC. This is the June 14th level. And price traded perfectly above it and perfectly below it. Here, then here, and there, and there, and there. And then here recently we finally rallied away from it here, and we're about to get another FOMC later this week. It'd be interesting, given the uptrend here, do we come back and sit on this one and then try again? You know, is that one going to be sold off initially, causing us to retest this one and then bounce back to the one above? Is that a path forward for this market? Again, the YM's been very strong here in the short term, but for the year hasn't done quite much. You know, up until this point right here, it was exactly break even on the year and was going flat. It's recently broken through these highs, so this is a big time zone up here. And we're now into that 35.4 zone, which has been an area of resistance for a while. So are we going to break higher and go grab that high finally? Do we need to fall back a bit before? How's this going to play out? So going to keep an eye on this one here. The next pullback could be a tremendous opportunity here to the upside if this thing's going to keep stretching. But still way behind the NQ right now. Looking at a couple of candidates popping up here on some of the scans. This is BDX. BDX with a huge gap up here today. And throwing off a bit of a tail. This is above the previous year's high. So huge gap up, maybe a little bit of profit taking. Earnings coming up here pretty soon. This is a perfectly D-shaped profile. if you go look up the Gaussian curve in the dictionary, it's going to have this picture right there. It's so perfect. And when that's the case, and you have this bit right here, and you have that reaction, it's hard not to think that this move, could be ahead. It's just kind of how it plays out over time. So this right here is providing a tremendous potential opportunity to sell this thing in the very near term, or even longer term out there. Again, if this candidate, I'm going to add it to the sell list, by the way, if this candidate does pull back, and we have earnings coming up August 3rd, so there's still a little while next week. The 280 level could be very useful in this case, because again, we don't have to, while it could make it all the way to 250, you don't have to hold it to 250. We can bet that it just falls below 280. You know what I mean? And so that could be a very useful strike there, as this thing maybe makes it back to 270 or tries to fill a gap at 265. So this one, sell candidate added to the sell list here. That's BDX. Earnings coming up next week on Thursday before the market opens. Rivian right now showing a bit of a tail here developing at the moment. This one range bound at these highs. Not eager to sell this one at the moment. Instead would be, I'd love to see a retest of 20, or maybe if price is just below it to see how it behaves. But this one right here pushing well through 22, which could open up the 28 up ahead, and maybe as high as a 34. Right now, we'll see if it can get a little bit more pullback here. AAOI on the list right now. This one has been so bullish, so strong, came out of nowhere here almost, but you can see it lifting right there at $2 and went from 2 to 11.48 on the high. Big time move here and that series of strength. But we're now making our way back down. VPOC is here. CLVN is 635. This one's having quite a bit of movement here, and it's hard to, fade this strength sometimes, but maybe there's a little bit of a return back to value down below. Interesting movement out of that one. Let's see what else we have. Redfin. Oh yeah, we'll take a look at that. Redfin with an MGR gap up. Redfin's had quite a bit of action here lately as well. It's gotten a series of impulse moves, and they've all been to the upside. It's very interesting. 4 impulse moves this year, all to the upside. You have this one, bang, with a key range pullback. Then you get this one, bang, and here's your pullback to the key range. Then you got this one, bang, and then here's the recent one, bang. Man, that thing's being pushed up in major waves here. You don't see that happen very often like that. Major rounded bottom here. Redfin could be getting pushed up here, and if that's the case, I'm thinking 2150 here as a midpoint retest could be ahead. And right now 14, call it $15. What if price goes to 1250? 1250, and man, now we're talking. This will be interesting. We do have earnings coming up for this one ahead. Redfin looks like it is out to next week, the 3rd here. That's August 3rd, it looks like. Lastly, AMLX Pharmaceuticals, downtrending market, downtrending channel, very bearish overall. this year has been, while everything else is recovering and rallying, or lots of things, this one started the year rejecting the previous year's highs, failing at the close, and dropping into the mid. And now it maintains a very bearish downtrending price action. Year to date, VWAP is bearish and dropping. So this one continues to look the part of a bear candidate here. An impressive gap up, but quite a bit of profit taking right out of the gate. So we could be looking at another rotation back down in this one. Up ahead, we'll keep that one on the sell list and see how that develops here. The other one here is RVLV. So Lou posted this one here before. Yeah, this is the Revolve group. Going back to, just real quickly, you go higher to the weekly time frame, and one thing that it just stands out real easily. A couple things here, really, but I always go to the recent market structure. What's the most recent market structure? You got 32 up there, and then you got about 20 right there. That's your most recent market structure. And then here, lately, we were down here in this tiny little range at VPOC, and we start to break it to the upside. That's a really good initial move. But ideally, you need to get above 20 to open the door to 32.50. After breaking this range up, any pullback here could be an opportunity to go recover this to the upside, up ahead. So that's kind of the weekly chart perspective on that. If you look at the daily, you bring it kind of down in time frame, and you can see here, there's the range right here that we're just talking about. Great rounded bottom in the breakout, the markup here. So we're talking about, okay, a pullback could be defended now, and you go make a move for 20. And if you look to next month here, higher value relationship, midpoint here, I think early next month could be a pullback and a continuation through the 20 level. If you can close above 20, by the end of August, man, this thing could be making a move back up. That's quite bullish. This year you do have this impulse move, that strong low to this high, and the pullback. That's a large impulse move. And that large impulse move ultimately could give us the long-term upside target, which would be about 45. So this is 21, 33. That's 12 plus 33 equals 45. And right now we're at 1962. So what if we pull back and we can get an 18 entry? 18, how far can this thing go over time? So yeah, this one's looking good. I like the very short-term breakout. Right now is very strong. So just the next pullback alone, if you're looking for a super short-term swing, just the next pullback alone could provide perhaps a return back to that confluence of data points right there. There you go. Come on in. Oh, you want to go in the back? Okay, she's hunting right now. Give me 1 sec. Yeah, man, her hunting skills right now, she just can't get enough. She went like almost an entire day without touching her food because she was eating everything in the backyard, eating anything she was catching. Oh man, some of the things she's eating lately, goodness. I saw her take down a cicada after the metamorphosis as like a snack, and then I saw her dig one up that's like the before the metamorphosis, that ugly looking bug, and then you have the exoskeleton that you find usually. Saw her get one of those bugs and then snacked it up before it became a cicada. It's like, good man, what's going on over here? She's hunting everything out there too. Frogs? Sorry, it's just, I've never seen her so, like, this is her time right now. It's like perfect warm weather, All kinds of noises outside. She's going for it. So RVLV, Lou, this looks the part for a great opportunity for multiple time frames of strength, depending on your outlook. You have the short-term swing, so if it pulls back and gives us run good pullback, it's a 1 to 5 day swing high. This is the first time in multiple months that we are now developing a higher value relationship. This was a lower value with a bullish bias, change of bias. So now it's playing out. So the next pullback into this mid could be a buy for a continuation up. You're talking about a plus 5 there, 17.5 to 22.5. And that's a great opportunity there, back to this confluence of targets. And then from there, if it can push through the 22.25 here, you open up, the top end of the recent range before that. So some thoughts on that one right there, Lou. It looks really good. I like it. I'm going to add this one here to the buy list as well. There we go. RVLV. That could be a nice little squeeze candidate. And only monthly options on this one. Not a whole lot of daily volume, but enough to do what you got to do. Enough open interest as well. So some thoughts on that one. There's another question here regarding Shopify. So I wanted to look at Shop here. Yeah, so Shopify, yeah, the reason this one didn't get a buy on the MGR signal today is because of what you mentioned. Friday's range is too small. You want a day that's at least, I think I say average size or something like that at least. And I also am looking for a certain close percentage, I believe. So there's the midpoint and the close is right here. So if you gap above the mid, say to right there, and that's not very convincing. So you want the close closer down here so that the midpoint seems like an insurmountable obstacle, and yet it gaps well through it. It gives a little bit more oomph in that way. Apple today does have one, but I mentioned it wasn't the strongest. And I think that was part of it today as well, is that, it is one technically speaking, but you look at where we closed and look at the mid, here's the low. It technically was one, it opened here. So multiple things for me on this one this morning. It wasn't great. It wasn't bad. It was fine. And you can see here today it's not what we would normally want. Normally you'd want it to gap up. You want it to get a quick pullback, and then you want it to continue higher. This one kind of came up and rallied first and then put in a top first and is now testing the mid. It's not what you like. But part of it is here's the midpoint. Here's the close. It's in that closed territory, which is fine, which is probably the bottom, say bottom 25% or something like this. So it is fine, but it's not great. And then technically, yes, we did gap above the mid, which is technically fine, but it's not great. You want something that's a stronger gap against that mid, a pull back into the mid that gives a great move. So all those combination of things they were fine enough to get a signal, but not a great signal. So when you double click the signal, this is the live signal, by the way. When you double click the live signal, that's your close percentage. So that says that the close needs to be at or below 25% of the day's range for a buy signal. So if this is the high and that's the low, it needs to be in the bottom 25% of close. And that's what this is. The body size says that the body from here to here needs to be at least 50%. It needs to be at least half the day's range. Which, again, it's probably best if that's higher. It's probably best if it's 70 to 80% body for the signal. But you also lose some candidates that might be good otherwise. You're just kind of... So you could play with this and see what you like there. You could increase... I wouldn't decrease it. But, you never know. You never know. If you decrease this, sometimes what you might get is, say, a tail with a small body down here, a close that is here, the midpoint that's here, and then the next day does gap up here. So that is an MGR, but we don't have it currently because of this constraint. So there's some being left on the table there. So this is a good one here that you can go back and work with. This one here, you could go stricter on and say, okay, bottom 80% or something like that. But again, being flexible is good, I guess, at times. I never touch this. 50 bars back is a good amount of bars back. That's plenty of bars. And then the bar multiplier is how big does this bar need to be? And that, again, gets to where you could have a lot of varying results depending on how you work on that bar. If you say the bar just needs to be average size, that would be 1. And if you apply it, maybe this goes away. Oh, maybe not. So that's at least an average size bar. So by making it 70, we're making it super easy to get in the list because it just needs to be 70% of average range. Remember, 65% or lower is compression. So if you have this is telling you that if I go to 65 here, now I'm looking at a compressed range and an MGR gap really doesn't matter. So this is almost size of range here. So ideally you wanted at least 1. Ideally you want this range maybe even bigger. Maybe it's 125% day, and now you're only going to get big time ones, right? So the MGR signals here super flexible in terms of the variables here, these parameters, and sometimes that's not the case with some of our wick reversal or maybe extreme reversal. There's some play there where you can get certain things, but MGR you could get quite a bit of different things here. But for example, let's look at this right here. That's a 125% day. That's an MGR gap down. This one right here is a 100% day. Right there. Yeah, those are high range days and you're getting gaps. I mean, there and there. See, this is where you can tell, right? This one right here, compared to today, there's your midpoint. Compared to today, the close might have been somewhere here. This matters. And you can see that the size of that range there is between 100 and 125, so call it 112.5%. So it's a pretty good size range day. And then the next morning, it didn't just gap barely above the mid. It gapped well through it and actually beyond the previous day's open. That is a forceful open right there. And the first move was quickly defended, and it was nothing but open air through that high. That is an MGR signal. You know, this is another one of those tremendous MGR signals, only this one gapped well beyond the high. In that case, sometimes you're not going to get that much of a move, but here's another tremendous one here where you have, again, a decent sized day. That's a 125% day. And it's closing here. There's your mid, and it didn't just barely get the mid, it dropped it. So that's where the next iteration of MGR could become even more potent, is that while you can have quite a bit of flexibility right now in the signal itself, one thing that would provide, I think, the best amount of flexibility with regards to identifying better candidates would be how far away from the mid does it gap. If it gaps precisely to the mid, technically it's an MGR if all the other stuff qualifies. But it's not as good a signal than if you gap, say, half an ADR below the mid or below the previous session's range. Those gaps are much more meaningful, and we can add a parameter there that says there needs to be a minimum threshold there of a gap through the mid. And that right there, I think, will increase tremendously the accuracy and intensity of these signals. So that's going to be another iteration there that I will be adding sooner than later. It's something I've talked about before. And it would have helped in this case right here, because this was the least amount of effort possible to get a signal, and it's technically fine right now. But it was also, we knew right away it wasn't the best, especially, today's not an aggressive day in general. So, but not bad. So anyways, a good long-form discussion on MGR there. MGR is a tremendous signal, a lot of flexibility, and there's still plenty of potential left in making it even better than what it already is. And that's what I like about that one. Again, there could be a secondary MGR signal that we fire off that supports smaller bodies and things of that nature. So there could be a lot more in play there out of that one up ahead. So good stuff there. Yeah, that's a good looking box reversal. Oh, give me one sec. Yeah, but oh, good to hear, Dwayne. Good to hear regarding MGR. Real quickly, and I'll get back to that that STAA real quick. But one last thing on MGR. Initially, the MGR was designed to be a high range day, almost like an extreme reversal, closing at or near a low, and then the next day experiencing a tremendous squeeze of those trapped participants. This is almost exactly what you would like to see, and then it's a forceful return. This is not that. And the reason that this is there is because of the minimum requirement to fire a signal that I do have right now. If I were to put better constraints on that type of signal, that wouldn't be there, right? And that's the case with a lot of these signals. You can open up the filter parameters or constrict them so that you get better signals, but better quality signals, but you get less signals, or you can open up the filters, get more signals, but some may not be as good a quality. So that's where understanding, okay, which ones are better, which ones are not, can help. But that's the case with any signals we might put on the board here. So with this one, there's plenty of potential in improving it even beyond where we're at, and I'll be adding that change here sooner than later. Now back to STAA. And the question here is, do you consider the highlighted box here a box reversal, or is that too much time spent below the structure? I'm working on identifying good box reversals. No, that is a fine size. It's a great size. And size is also relative to the preceding range and the preceding structure as well. If you got this giant structure and you only had 4 days down here, it could lead to a little move, but it's not as significant as this larger box here, and then getting that significant move, and now you're looking for multiple days of energy that could be released, and that could get you fueled up the move, right? So it's almost like when you look at a box reversal, it's almost like going to the gas station and fueling up the tank. This is a full tank of gas here, and now you're able to go farther. And if you only went down here and it was 1 or 2 or 3 days, then yeah, it's the tank is got a little gas in there, but how far will it take you? Probably not as far. If it was a 1 or 2 or 3 day move, you're only going to pop a little bit. But if it's a bigger, more significant range, then it has more juice here to get you going farther back within the range. Now, there you can get too big or too heavy, and sometimes that can happen, but that looked good. That looks really, really good right there. That's not bad at all. Yeah, the retest right on top is a great way to go. Great way to go. Before the retest, here's the breakout to the pivot high. So that's a good pivot high before the retest. So now that pivot high is very important, and you want to go attack it and maybe push through it. Yeah, it really opens up some upside. So good move right there out of this one. Yeah, and I missed this a little bit earlier. Crude oil, quite strong here. We mentioned a little bit before that there's a 7-point move that could be ahead. Which way do we break out of this range? And so far, we're going up. We are going up with some force. 1, 2, 3, 4, 5, 6, 7, 8 days. So we put 8 days here. Right there, that's your 8-day narrow range. Our guess here, and that's the reading. We talked about before that it could be about 6 to 8 points of range, and let's fall somewhere about 7 points. And if it breaks through 77, 77 plus 7 is 84. 83.5 is the edge. You break through 74 to the downside, 74 minus 7, and you're at 67, and you're at the edge. So we knew that we had a very good potential to get about a 7-point breakout move out of this range ahead. Was it going to be down or was it going to be up? And really, we finally said it finally looks like we might go get that 80.5 now, and finally go finish off this move. So it's happening. It's happening. This was a strong rejection of 67. it staved off the initial return that would have dropped it right away and pushed it right to the edge. Instead of rejecting at the edge, it was able to build energy, and now it's making it move up. It's being defended in that bullish rising Pima trigger zone, and we got a major break through the 200-day moving average. And that was the last thing we talked about Friday. Was we've rejected off this 200-day multiple times, and now we're right at it. Man, if we push through it on next week, it could open up that move to 80.5 and 83.5. So it's doing it. It's doing it. This thing is strong right now. Obviously, a trap would be highly bearish. You know, what if you know, we fail back below and we get a higher high failure tomorrow? You know, something like this, and tomorrow looks like that. Then yeah, things will look bearish at the moment. But at the way it looks at here, that 200-day, the way it's gone bid, hasn't happened in over a year. And the next pullback again into that zone could lift this thing even higher. So big time strength out of crude oil. The breakout is to the upside. You can see it here on the ADR indicator. And again, I know we're talking ADR here. We're talking some MGR, some great questions coming through in the chat. And so right here, that is your compression of this range. These numbers over here are these readings. So if we're going to break out from below here, and that below reading is say 3.8, and we go higher, we're now looking for the upper red dot, which is about 7.3. So it's basically going from pink and going up to expansion blue. Going from pink, going to up, expansion blue. Going from pink up to expansion blue. So you're looking for about that 7.3 point move, knowing that this move, or this dot, will move as new information enters the picture. So it will continue to update and flow. But it's about $7. So great move right now. And that is a forceful push through the 200-day moving average for the first time in a good long while, which opens up the top end of the range. You know, this is the other thing we talked about last week, was ultimately, when you look at price action here recently, this is what we have. You know, we have since about the middle of November of last year, we have been in this range, and we've either been in the upper half of this range, or we've been in the lower half, or we've been in the upper half, or we've been in the lower half. Well, right now we're transitioning through the upper half. We've held the edge, and we're pushing higher toward 83.50 now. So we're making a move. It's happening. Tremendous. And I know I was super bearish here this entire time. I was bearish on that day. I was still bearish over here, and then all of a sudden that day started to happen. And we talked the day before here that if it can get through 72.50, I'll change my tune here. And it did in big fashion and started to work its way. So it has shaken off weakness. It has overcome market structure. 74, the big level here that it's overcome, and now it's working its way higher toward 84 up ahead. Once it gets there, it comes right back. We go right back to 74 in all likelihood. So great move out of crude oil. It's looking good. There's where am I? Oh, the Fed rate. That's where we are right now. What Fed rate do you think is being discounted in the markets? at this moment? Good question there. I came across, and I mean, I know many of you have probably seen this already, but I saw this over the weekend as I was preparing here for the week. Let me put it on this machine here. CME Group, CME Fed Watch Tool. There it is. So I got this Fed Watch tool, CME Fed Watch tool. This is the probabilities, and we got Fed July 26th right here. You can click on the September, November, December. And I always say December, the first 15 days of the month are where some of the volatility are at, and then the last 15 days of the month is where nothing happens. And so usually that last Fed rate is right at around that 2-week mark of December. See a little bit of movement, and then you kind of go quiet into the holidays. And then here you come out hard on January, and you can see all the ones moving forward, and you can click through here to the next one and see what the percentage is. Then you can click to November and see what the percentage is of the rates. The current rate is here, and you can see what the percentages are moving outward. You go here to December, and you can see what it is. Currently, for today, or for this week rather, this is the percentage. 98.6% that we go to 5 1/4 to 550. Right now, current rate is 5 to 5 1/4. So that seems like a pretty high percentage right now, and the market kind of sees what it. You know, it's going to be interesting again. What happens if something like this? What if it's different? But currently, that's the probability for Wednesday's meeting. Now, is that rate or that probability already baked into the current market at the moment? Because the probability is so high, I would say probably. It's probably already in, and you're starting to look out to September already. And in doing so, you can see that that's variance now coming into play. You got a little bit of variance now, and then you start to see what the potential is here. So. And again, it'll be interesting to see, for example, right now you can take a snapshot. I would say, you know, on Wednesday morning, take a snapshot into the end of the year of this chart, of that chart, of this chart, and then at 1 p.m. Central, when they change the rate or whatever the rate decision is, see how that affects the probabilities of the next ones moving forward, and start to build a little bit of an idea that way as well, of a personal knowledge base of what could be happening here. But this is a little Fed Watch tool here with the probability. You can click on the CME group and go find that. That's the link right here, but I'm going to post it in the chat right now. So you have the link straight away right there, and that's your Fed Watch tool link. And if you're watching the recording here, I'll also add this to the pin board. By the way, the couple of items added to the pin board here today, one of which is the earnings calendar for the week of the most anticipated stocks. A lot of big ones on the list, including Alphabet, Microsoft on Tuesday. You got some big ones like, say, Boeing and Meta on Wednesday. Others as well. Obviously, Thursday, McDonald's on Thursday, MasterCard, Crocs, Roku. And then on Friday, some of the big ones here involve oil-related stocks like Exxon, Chevron, and today we've already had DPZ this morning. Probably should have looked at that right out of the gate. My apologies on that. So let's go look at that real quickly here. DPZ was on our buy list and we switched it to our sell list, and now it's kind of didn't really do anything with it on the sell list yet. And so far, earnings coming out and holding 308 versus 304, not bad, and holding those gains. Not only holding, actually gapping up today, filling the gap, but I mean gapping up, which is great to see because since last earnings, price had been sitting here. We put it on our buy list on that day. We had a target to get it back here and maybe as high as here over time, right? But it did it in a couple of gaps really quickly. So when something gaps up like that so fast and then earnings coming up, there's always the potential that earnings might disappoint and then this thing drops back very quickly. But it held on. That's very good. Remember, this move right here was a massive gap up. I believe on a partnership with Uber Eats or something like that. Yeah. So anyways, big gap, holding it right now. I put it on the sell list as a short-term reversal candidate, but for the most part, this thing is pointing upward. That's why we had it long here. So tremendous strength already out of this one. Holding on to those gains here after the gap up this morning. Not bad. F5 is later today. Earnings later today. This one's been mostly range bound and choppy, but turning around off the lows. So very bad 2022, like a lot of the market. Dropped here from 250 back to 140s. Even lower, about 130s. Since it dropped here to 145, 145 has been the level. You can see it right here. You go back. It dropped there, it held, it bounced, and it came back and it stuck 45. You look 60, that's the top. You look a little bit lower here into say 30, that's the bottom. You got a 15-point distribution kind of on top, 15-point on the bottom, and overall you have a 30-point distribution. The 145 level is also VPOC. That's VPOC there for the year, or for the 5-year composite. This right here was a great reaction at the previous year's low, and it snapped back immediately to the close, and that's where it's been holding. You got a flat 200-day. You got a flat year-to-date VWAP. You're chopping around the previous year's close, and you have an upward bias right now. You could finally see this thing make a move back toward 160. It's been a 1 standard deviation trading range. 1 standard deviation above, 1 standard deviation below. This is value. It's been hugging value. So, you're looking for a move right into this 160 level. We're at 148. Maybe from there it comes down above 160 and you're opening up more upside. Not sure it can do that. It's been a super long time since it's done really anything. But we'll see if something starts to change here on earnings. But a good lower low failure. Good reaction here. Holding the 145s with an upward bias toward 160. This one has earnings after the close here today. We'll see how the market responds to that later on today. One that's having a great day here today is XPEV. And I didn't mention it earlier. I should have. I was looking through some of the MGR candidates, and I wasn't really impressed. And then I saw XPEV, and it looked more impressive in terms of its movement right out of the gate. It didn't look great in terms of the preceding range and what it's doing, but it looked good right out of the gate compared to the others. And this is the one that's up 10.5% right now. Redfin's up 5.5 or so, but XPEV rallied quite a bit better here with regards to the MGR signals. Apple's still kind of messing around up there, so it really didn't do much. Oh, thanks for that, Boricua Gato, El Gato Malo. That's a cool chart there. The CO2 versus the trend, and the rate that it continues to increase despite the travel restrictions. Interesting there. And yeah, Twitter is now X. By the way, this is what it looks like up here at the moment. This right here, clearly a little bit of a pullback phase, clearly a pullback, a little bit of this, a little bit of that, a little bit of this. I feel like right now it looks kind of like this, where you could get a feeling where, oh man, this thing's about to drop, and then you get this the next day, and it leads to that, you know. So still very bullish here, Apple. It's I always say once you get to this many rotations, like count these rotations. I mean, that's you just don't get rotations like that. That's just fairy tale stuff. But it happened this year. It happened in Meta. It's happening here. I mean, every time you get a pullback, it's a buy the dip. You're on your 20th round here, and it still is. So while this looks about as bearish as you'd normally expect, you'd normally want a great higher high failure. You'd normally like these bearish rejections, especially at the high close and right off the previous highs. That would normally get you back to the previous pivot low, if not mark you lower. That's normal market stuff. And we haven't really seen a normal market out of some of these stocks. It's been very, very overly aggressive, bullish price discovery back up the chain. So I would anticipate, again, the next pullback could still be a great squeeze and a strong finish. Now keep in mind, Apple is coming into another portion of its most bullish seasonality, and that's right around the beginning of August into Labor Day. So those 5 weeks are among the most bullish 5 weeks of the Apple cycle. And we're coming into a period here where we've just had another most bullish period. These 2 months tend to be the most among the most bullish, and then you follow it into August. So much more upside could be ahead for this one, despite the weakness it looks like it's getting. I would say, man, the next pullback here, you get one of these or two of those, and you're flowing again to the upside. But yeah, Twitter is now X, I suppose. And I briefly saw some headlines about what Elon is trying to do with Twitter moving forward, including making it more of a messaging app, and also perhaps even tied to bank accounts and all kinds of things. So all kinds of changes coming to X. But Twitter and tweets, and that's kind of in the vernacular. So I wonder, even if it's called X, do you still tweet now or do you X? I'm going to send a few X's out. I don't know if that sounds about right. Could also be a big little gimmicky thing he does. You know, he likes to do wild stuff. It'll be back to Twitter maybe. Who knows? Um, yeah. Yeah, he definitely is. Meta's thread engagement down 70% or dropped off 20 or 70% here recently. Airbnb. Why is it not doing it for me? That's incredible there. I again I hadn't seen it what I haven't looked at threads or tried it out or anything like that. But there's been a lot of copycats. Or there's been a tried copycats and it just nothing seems to knock Twitter out. But it also doesn't seem like it's terribly difficult, right? Everything's fairly simple in terms of like the the underlying things of making a Twitter like company, but you know, it's also I guess about the speech capabilities. You know, are you gonna limit, censor, free speech? How's it going on? And so you have all these different ones, and that seems to be a little bit more difficult. And then you have people on sides of the spectrum here and all that. Um, yeah, Parler, Mastodon. Isn't that Truth Social? And all these ones. So I don't know. We'll see. Again, Twitter's not publicly traded anymore, so we'll see if it comes back. You can't take X as the symbol because that's U.S. Steel. So interesting. Airbnb right now working on a failed new low and an uptrend, says Dwayne, and that's right on. Another one that exploded to the upside and hasn't really slowed down. And I really undershot where these could have gone. Again, initially we were just looking for a move that takes us up here and fills us into about the 128 level, with the potential to go as high as 144.63, the top end of the range, but wasn't really anticipating that, as we had already seen quite a bit of resistance here. But after a little bit of sideways, man, this thing exploded here. We're still working our way up. Rising PIMAs. Failed new low here today. Developing here in the up move. And again, you know, until proven otherwise, these markets right now still showing quite a bit of strength. Some of these, you know, these are not ginormous companies. These aren't the Metas and the Apples and the Teslas, but there's that other middle zone of stocks, right, that we talked about before, like the Tesla, or not the Airbnbs and the Rokus, the Coinbases, and some of those that all formed that key range. That down the way, at some point down the way, it was going to point to the 100% target to the upside. That 100% target still points to 182.72 here. Keep in mind, right now we are just at the key range high, and this failed new low is sitting right on top of it. So if there's a failure here, you know, you rotate back down, but down the road, you're looking at 182.72 as that target. Tremendous considering we rallied here off the 105 zone. That's the key range low here. Back to the middle, back to the top. Can we continue to work our way toward this upper target? I think so. Now, what path does it take to get there? Who knows right now? But 182.72 could still be ahead for Airbnb down the road. Coin, similar key range, similar rejection at the low, similar push to the high, but this one almost got the 100% target. 120, almost got it. 114.43, so missed it by $5.5 but more than doubled from the $50 low here. $50 and went to 115. So great move. I think ultimately we still get that target at some point, but a great move there out of that one. We talked about Roku before. There's your similar key range right here in Roku. Similar rejection at the low, back to the middle, back to the high. Sitting there now, a little bit below it, but down the road, $100. That's the 100% target. $100. So even if this thing pulls back to 65, man, that's still a great continuation. Rounded bottom developing in the higher time frame. You love the way that this turnaround occurred right here because it looked like it was getting bearish, and then right there off the CVPOC, this thing goes bid and explodes to the upside. Great movement out of this one as well. So good stuff here. I know a long session here to start the day. Just talking a lot of stocks here, getting things set up for moving forward. Again, thank you for joining me here for kind of a supersized Monday morning here. Mostly range-bound action for the NQ, the ES. YM's a little directional right now. The rest are mostly range-bound, but we have a pretty big week that could be ahead. Earnings, Fed, GDP, and today is mostly about building it out a little bit ahead of the movement to come. So finding some candidates here, and ideally we start getting some movement here pretty soon that could lead to some high volatility moves. All right, everyone, thanks a lot for joining me here today. We'll be back on the mic here in a little while as we build out the rest of the week. Have a fantastic morning, and I'll see you in the room. Take care.